Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's going on with the Russian economy. Now, you may not be aware, but Russia has recently been involved in a new space race that's involving India, China, and the United States. And all four of these nations are looking for the first moon landings since the 1970s. Russia's spacecraft Luna 25 was its first attempt to land on the moon since 1976, and it looked like Russia was ahead of the game. It was going to beat all of the competition. But unfortunately, as the craft was preparing to land, it spun out of control and crashed into the surface of the moon. And the official statement from Russia's state corporation, Roscosmos, said the apparatus moved in an unpredictable orbit and ceased to exist as a result of a collision with the surface of the moon. And unfortunately, from Russia's point of view, it's not just Luna 25 that's been moving in an unpredictable orbit and spinning out of control, so is its economy. Over the course of the last 6 months, we've seen a significant decline in Russia's trade, which led to a significant decline in the value of the Russian ruble, and we recently saw the ruble dip below the landmark level of $1 to 100 rubles. And as a direct result of that, the Russian central bank were instructed to increase interest rates to address this problem. And after an emergency meeting of the bank, we saw a 350 basis point increase in the official rate of interest. Now, the movement in interest rates did achieve its objective, and we saw the value of the ruble starting to recover. However, unfortunately for Russia, there will be serious consequences of this move in interest rates. And if the Russian central bank is told to continue supporting the value of the ruble, both through interest rate rises and purchases in the market, then that could have seriously negative consequences for the Russian economy. So in today's video, I'll have a look at what happened with Luna 25, the moon landing failure, because although that's not directly related to the Russian economy, it is providing a good metaphor as to what's going on in Russia right now, and I thought you'd be interested in hearing a little bit more about that program. We'll have a look at what's been going on with the Russian ruble, what the situation is with regards to interest rates and inflation, where Russia is with regards to its GDP and trade. And then finally today I'll wrap up with my summary as to what I think is likely to happen for the Russian economy over the course of the next 3 to 6 months.
Russia's first moon mission in 47 years has failed. The Luna 25 spacecraft spun out of control and crashed into the moon after a problem preparing for pre-landing orbit. Russia's state space corporation, Roscosmos, said it had lost contact with the craft at 11:57 GMT on Saturday. In a statement, it said, quote, "The apparatus moved into an unpredictable orbit and ceased to exist as a result of a collision with the surface of the moon." It added that a special interdepartmental commission had been formed to investigate the reasons behind the loss of Luna 25. The mission had raised hopes in Moscow that Russia was returning to the big power moon race. But this failure has underscored the decline of Russia's space power since the glory days of Cold War competition. Moscow had been the first to launch a satellite to orbit the Earth in 1957, and Soviet cosmonaut Yuri Gagarin became the first man to travel into space in 1961. Russia had not attempted a moon mission since Luna 24 in 1976. It's been racing against India, whose spacecraft is scheduled to land on the moon's south pole this week. It also faces competition from China and the United States, which both have advanced lunar ambitions. Luna 25's failure means that Russia may not be the first to sample the frozen water which scientists believe the south pole of the moon holds. It was not immediately clear what long-term impact the failed mission would have on the country's moon program. The crash comes as Russia's $2 trillion economy faces its biggest external challenge for decades: the pressure of both Western sanctions and fighting the most significant land war in Europe since World War II.
Now, before we go on any further today, I want to talk to you about today's sponsor, Exter. Exter makes the world's coolest wallets. They're super slim, around half the size of conventional wallets, but still allow you to carry up to 12 cards and cash. All Exter wallets have built-in RFID blocking, which protects you from data theft and wireless skimming. And Exter have also developed a super slim tracking device, which is solar powered and allows you to track your wallet's location from your phone. But the coolest thing about Exter wallets is that they provide you with quick card access, allowing you to access your cards at the click of a button using Exter's signature trigger mechanism. Exter wallets come in a variety of designs and colours, and as well as making cool wallets, Exter also make great accessories, including key cases and this uber cool tool card. And the great news is that Joe Blogs viewers can get a discount of up to 25% by using the code JoeBlogs at checkout. So if you're looking for an uber cool gift for someone you know, or maybe you just fancy treating yourself, please click in the link below. Now, I thought I'd start off by looking at what's been going on with regards to Russia's revenues, because this is the fundamental problem that the Russian economy is suffering from. This chart shows the daily value of Russian fossil fuel exports from January 2022 through to the 13th of August 2023. The blue section at the bottom of this chart shows the revenue from coal. The purple section above it is revenue from crude oil sales. The light section above that is liquefied natural gas. We then have a very thin blue line for liquefied petroleum gas. The lilac section above that represents refined oil products such as gasoline and diesel. And the orangey brown section at the top represents the sale of natural gas through pipelines. Now, if we start off by looking at total income. At the start of 2022, which was around 7 weeks before Russia invaded Ukraine, total revenue from fossil fuel sales, which represents the vast majority of all of the income that Russia earns, was running at around 750 million euros per day, which is around $825 million. And if you annualise that figure by multiplying it by 365 to represent the number of days in the year, that means that Russia was earning around $300 billion from the sale of fossil fuels. If we then look at the shape of the chart, you can see that there was a significant increase in total revenue in March 2022. And this was in the immediate afterwar of Russia's invasion, when we saw a huge increase in the price of all fossil fuels. The markets were thrown into disarray. Nobody was really sure what was going to happen, whether Europe and the West were going to continue buying Russian oil and gas, and whether or not there would be world shortages. And as a result of that turmoil, prices rose dramatically. And you can see the two biggest movements in terms of revenue from Russia's point of view were crude oil, where sales rose from around 300 million euros per day to around 500 million, and the revenue from natural gas pipeline sales, which rose from around 250 million euros to around 400 million. And the net result of these increases in revenue was that Russia's total revenue increased to around 1.2 billion euros per day, which is the equivalent of about $1.3 billion. And on an annualised basis, that represented income for Russia of around $480 billion. So the immediate impact of the war on Russia's revenues was positive. Russia was having a bumper payday. But as you can see from the shape of the chart, the increase in revenue wasn't sustainable. And by October 2022, Russia's revenues were back down to around 750 million euros per day. And since that point, we've seen a continued decline. As the sanctions kicked in, more and more countries decided they didn't want to buy any oil or gas directly from Russia, and Russia has struggled to be able to find replacement markets at the same levels. It has been able to sell more products into countries like India and China, but the problem that Russia has faced has been twofold. Firstly, they've had to sell their products at a discount to encourage those countries to buy them. And secondly, there's been an overall decline in the market value of oil and gas. So both of those factors have dragged down the sales price for Russian products, and as a result, the total revenue has fallen. And by the 13th of August 2023, Russia's total revenue from fossil fuel sales was down to around 450 million euros per day, or $500 million. And on an annualized basis, that represents income of $180 billion, which is $120 billion less than it was earning at the start of 2022, and represents a fall of $300 billion against the annualized figure for the peak sales period. And if you look at the breakdown of Russia's fossil fuel sales today, the vast majority of income is coming from crude oil sales, which are at a similar level to where they were at the start of 2022. Well, the problem from Russia's point of view is that although the revenue is similar, the volume of oil that it's selling is significantly higher. So it's earning less margin on that oil. And if we look at the figures for the other fossil fuels, the revenue from liquefied natural gas has fallen compared to where it was at the start of 2022, which is surprising because there's been a huge increase in global demand for liquefied natural gas as a result of a lot of the countries in Europe having to develop liquefied natural gas facilities to replace the pipeline gas that was previously being received from Russia. There's been a significant fall in the revenue from refined oil products, and this is partly as a result of the sanctions and partly the ban that was brought in on the 5th of December by the European Union, banning its member states from buying refined products. And the problem from Russia's perspective on that is twofold. Firstly, refined products are higher margin because they've been through the refinery process. You charge a higher price and make more profit on those. So those sales are more valuable in relative terms for Russia. And secondly, Russia has a huge refinery industry. So it's geared up to pass large volumes of its own crude oil through that process before it sells into the international markets. So as the demand for refined products falls, it causes more pressure on Russia because they're having to find more countries to take crude oil sales. And then the final section on this chart, pipeline natural gas, is the one that's seen the biggest single fall. At the start of 2022, Russia was earning around $275 million per day. So over $100 billion every single year from the sale of natural gas. However, as you can see from the chart, the sales now are minimal. And the reason for that is obviously because the countries in Europe that were being fed that pipeline gas no longer want to buy it. And it's very difficult for Russia to be able to replace those sales because the only way they can do it is by liquefying that gas. And Russia doesn't have the facilities to be able to do that. And it simply doesn't have enough cash at the moment to be able to build those facilities. So the overall summary of this chart is that Russia has seen a significant fall in its income as a direct result of the sanctions, and this is the underlying problem for the Russian economy. This chart shows a movement in the exchange rate between the Russian ruble and the US dollar over the course of the last 12 months. And this shows that in August 2022, one US dollar was trading for around 59 Russian rubles. Today, it's trading for more than 94 rubles. And as you can see from the shape of this chart, there has been a constant and continued decline in the value of ruble over the course of the last year. And as we discussed at the start of the video, on August the 14th, the value of the ruble fell to less than 100 against the US dollar. And this was just too much for President Putin and his team to be able to cope with. They decided that something needed to be done to arrest this decline, and an emergency meeting of the Russian central bank was held, following which it was announced that interest rates had been increased by 350 basis points. And as you can see, the direct reaction to that from the markets was that the Russian ruble did recover in value slightly. But if we take a step back and look at the current exchange rate compared with the position over the last 5 years, you can see that 5 years ago the exchange rate was $1 to 65 Russian rubles, and the current rate is actually the worst that the ruble has traded at any point in the last 5 years, excluding the very brief crash in the value that was seen immediately following Russia's invasion of Ukraine. If we then have a look at the last 10 years ago the Russian ruble was trading at 32 to 1 US dollar, and 25 years ago 1 US dollar was worth 10 Russian rubles. So the current decline in the value of the ruble is not just embarrassing for Russia, it also has serious consequences for the economy. Because the generally accepted economic principle is that if your economy is strong and performing well, then your currency will be strong and performing well also. However, if you're experiencing problems in your economy and nobody wants to buy your currency, then that generally results in a fall in the value of your currency. And that's exactly what we've been seeing in Russia over the course of the last 12 months. This chart shows the movement in interest rates in Russia dating back to the start of 2022. And the shape of this chart is very different to those that we've been looking at for the Western world. Over the course of the last 18 months, the West has experienced problems with high levels of inflation. And as a result, most of the economies have been rapidly increasing interest rates. So when we look at charts for economies such as the USA, the UK and Europe, we see a stepped profile where rates have been increasing month on month. However, the Russian chart is almost the opposite of that. Immediately following the invasion of Ukraine, the Russian central bank increased rates to 20%. However, surprisingly, over the course of the next few months, the official rate of interest was reduced rapidly on 5 different occasions. And between October 2022 and July 2023, the official rate of interest was 7.75%. Which was actually lower than it was before the war started, which was quite surprising to a lot of economists because the sanctions that were applied against Russia meant that its import bill had risen dramatically, and usually that results in high levels of inflation. And you can see on the right-hand side of this chart that in July 2023, the Russian central bank increased interest rates to 8.5%. And then on the 15th of August, there was a further increase of 350 basis points to the current rate of 12%. So we've already established that the main driver behind this increase in interest rates is to try to improve the value of the Russian ruble in the international markets. But what I wanted to delve into now is what the impact of this increase in interest rates will be on Russia's economy and its GDP. This chart shows the movement in the official rate of inflation in Russia over the last 12 months. So you can see that in August 2022, inflation was running at 14.3%, which is a very high rate of inflation. Over the course of the last 6 months or so, most countries in the West have been concerned about rates of 6 or 7 or 8%. So 14% represents a serious problem. But bizarrely, as we've just seen from the interest rate chart, Russia was actually in the process of reducing its interest rates at a time when inflation was running at a very high level. And that goes against the traditional policy of increasing interest rates in order to bring down inflation. So these figures do look a little bit peculiar. And as you can see from this chart, over the course of the following 6 months, inflation reduced in every single month. And by February 2023, it was down to 11%. And once again, this is quite surprising because interest rates were not being increased. And during this period, Russia was facing more and more sanctions, which were restricting the amount of income that the country was earning, but also increasing the price of all of its imports. So you would have expected prices to be rising month on month given those two sets of circumstances. But I think the single most surprising thing about this chart is the huge drop in the rate of inflation in March 23, when it reduced from 11% to 3.5%, and then reduced further in April to 2.3%, giving Russia one of the lowest rates of inflation in the whole world at that point. And once again, this doesn't really make any sense because you would have expected Russia to have one of the highest rates of inflation, not be a world leader. Now, in May, June and July, the official rate of interest has increased. However, the current level of 4.3% for July 2023 still means that Russia still has relatively low inflation. Now, as we've just seen, over the course of the last couple of months, Russia has increased its official rate of interest by 4.75%, which represents quite an aggressive increase. And the consequence of a large increase in interest rates is that it will make debt and borrowing more expensive for businesses and consumers. And therefore, higher debt costs will discourage people from taking on debt. So the traditional logic says that this will suppress demand and therefore bring prices back down. So this is a good way of calming high levels of inflation. But as we can see from this chart, Russia doesn't have high levels of inflation. It doesn't need to bring its inflation back under control because it's only running at 4.3%. But if the increase in interest rates does have this knock-on impact, then it's going to be bad news for the Russian economy and its GDP. This chart shows the quarterly movement in Russia's GDP over the course of the last 3 years. Now, as we've discussed before, the official definition of a recession is when a country posts 2 consecutive quarters of negative GDP growth. So you can see from this chart that over the course of the last 3 years, Russia has officially been in recession twice. The first of these periods was in 2020 as a direct result of the COVID-19 pandemic. Most countries in the world actually went into recession officially at that point because most businesses were closed down and the level of spending in the economy dropped to an all-time low. Now, also similar to most countries around the world, there was a consequential bounce back. So Russia saw 10.5% growth in GDP in the middle of 2021, and in the following 3 quarters it also recorded healthy GDP growth. However, in July 2022, as a direct result of the sanctions that were applied against Russia, the economy recorded a 4.5% drop in GDP, and in the following 3 quarters, there were also negative movements in GDP. So Russia officially remained in recession for 3 quarters. Now, remarkably, in July 2023, Russia posted growth of 4.9% in GDP. Now, this was partly as a result of the fact that that quarter is measured against the quarter from the previous year when the economy contracted by 4.5%. So there is an element of these figures being relative year on year. But the reason I wanted to share these figures with you is that the recent increase in interest rates that Russia has brought in will have a direct negative impact on both consumer spending and business growth. And that is extremely likely to result in a reduction in GDP growth and could put Russia into a situation where it goes back into recession. So what's the summary and conclusion today? Well, I wanted to post this video really to talk about what the knock-on impact of the recent movement in interest rates is likely to be for the Russian economy. As you saw at the start of the video, the main problem that Russia is encountering right now is that it's lost a huge amount of income as a result of the sanctions that are being applied against it. Total revenue from fossil fuel sales is down significantly against where it was at the start of 2022, before Russia decided to invade Ukraine. But it's not just the total fall in income that Russia is suffering from, it's also the quality of that income. Because when you look at the sales mix today against where Russia was historically, there is a much higher percentage of crude oil sales. And crude oil is the very basic form of oil. That is basically oil that you have taken out of the ground, put onto a tanker and shipped to somebody else, leaving them to do all of the dirty work and turn that crude oil into something that can actually be used into gasoline and diesel and kerosene and all of the other products that are used on a daily basis. And the problem that represents from Russia's perspective is that when your income is coming mostly from your most basic product, it represents your lowest margin product. You're not making any added value from that. You're not employing people to do things and helping your own economy. The best form of income from Russia's point of view is both refined oil products, where they're employing people in their own refineries to convert the crude oil into the finished products, because that's putting money into people's pockets, it's paying salaries and helping grow its own economy. And also the natural gas pipeline sales represented really high levels of profit because the infrastructure had been put in place, so the cost of delivering that natural gas was very low, and this represented a huge profit margin. So Russia has seen a fall in both its income and its quality of income, and the knock-on implications of that are twofold. Firstly, Russia now has less revenue to do things with, and it's still investing heavily into the war in Ukraine, so it means that Russia is having to delve into its reserves, it's having to draw down on the National Wealth Fund, and that's putting pressure on the economy, because at some point, if Russia carries on spending at this rate, it will run out of cash. And secondly, the fall in the level of trade means there's less demand for the Russian ruble, and as a consequence, the value of the ruble has crashed. Now, over the course of the last 12 months, Russia has ignored the value of the ruble. The Russian central bank hasn't been focused on trying to maintain its value. However, as soon as it passed that critical 1 to 100 level, President Putin decided that enough was enough and something needed to be done about it. And as a result, we've seen a large increase in interest rates. But the problem from Russia's point of view is that there will be knock-on consequences of that movement in interest rates. The main reason that most countries increase interest rates is to suppress spending. You want to reduce demand in the economy so that you can bring inflation back down under control. That's what's been happening in the vast majority of economies over the course of the last 12 months or so. And Russia have now joined this party, and they've done so in quite a dramatic fashion. If we look at what's been going on with interest rates in countries like the USA, the UK and Canada, we've seen small increases introduced on a monthly basis, so it's been a steady but sure process. In Russia, they've gone for the Big Bang theory. They've increased interest rates by 4.75% within 1 month. And this massive movement in interest rates is likely to result in a sharp drop in consumer demand and business investment and spending. So quite feasibly, we could see a sharp fall in the level of inflation from the current rate of 4.3%. But more importantly, it's likely that we will see a negative impact on GDP. And as we've just discussed, Russia has been struggling with its GDP over the course of the last 3 years and has officially been in recession twice over that period. So the overall summary of today's video is that the main reason why the Russian economy is struggling right now is the huge impact of the sanctions on its levels of trade. The amount of income that Russia is earning from fossil fuel sales has fallen significantly, and also there's been a serious drop in the quality of the income that it's earning. As a direct consequence of the fall of the levels in trade, the value of the Russian ruble has fallen significantly in the international markets. The Russian central bank has now done something to address that problem, but as with any equation in economics, there is going to be more than one consequence to increasing interest rates. And the biggest consequence from Russia's point of view is that the recent increase in interest rates is likely to reduce spending in the economy and therefore have a negative impact on GDP and cause further problems for the Russian economy. So hopefully you've enjoyed today's episode, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.